Yo, what's up, everybody? Thursday, May 6th. Guess who's in the news again? The Bond King, Jeffrey Guuuunnnnddddlaaaaccchhhhhh, saying that America has 163 trillion of unfunded liabilities, 5 times the national debt. Oh no, what's gonna happen? Oh no. Folks, let me tell you something. There is no such thing as an unfunded liability. Well, maybe they're not funded now, but they're going to get funded, and I'm going to explain why. Again, first of all, when you extrapolate out into the future like that, you can, and this is what these people do. It's like the debt clock and everything, everybody owes $80,000 or freaking $250,000 per family, ridiculous things like that. First of all, they never talk about national assets, but that's not even, that's not even part of the topic, really. That's not even part of the discussion. There's no such thing as an unfunded liability for a country that issues its own currency and where all of its liabilities are denominated in its currency. Now, if you take my Understanding the Daily Treasury Statement course, and it's also what I'm about to say, I've mentioned it many times on videos and on my blog and whatnot, you will see that each fiscal year, like last fiscal year, all right, there was 100, I believe it was 127 trillion, if I'm not mistaken, it could be higher than that, 127 trillion of government securities redeemed. That means paid back in a single year. All right, let me repeat that. And it says that it's right on the Daily Treasury Statement. That's not like some secret number that I, found out all by myself and nobody knows about it. That's public information. That's right on the Daily Treasury Statement. If you look at the end of the year, fiscal year 2020, which is the statement for September 30th, 2020, you will see, if you go down, I believe it could be table 3A or something like that. I have to look it up, but you would see it. 127 trillion, not million, not billion, trillion, in a single year of treasuries redeemed. What does redeemed mean? Paid back, right? If you hold a treasury security, you get the cash. So the government gave back the 127 trillion in cash, just swapped it out. Like the government, they retired those securities, they matured, and everybody holding those got paid their 127 trillion, not each obviously, but the total payout. So I mean, when you're talking about stuff like, they're talking about, oh, the Social Security is going to have a 4 trillion shortfall like in 2040 or something like that, or 2035. Ooh, we just paid back 127 trillion in a single year, all right? And it's going to be more even this year. How do they do that? Because again, all this stuff is, folks, is a keystroke on a computer. It's a bookkeeping entry. It's an accounting entry. All right? You're talking about a system where the accounting of that system, all right, the numbers, they're all in dollars, and a computer is used to either subtract dollars or add dollars. There is no constraint or no inability of the government to pay all of its liabilities in its own currency. And by the way, that's not inflationary. All right? I know a lot of you've been going crazy here. You've been making all these emotional comments about, a loaf of bread is going to cost $50,000 or $100,000. Look, let me just say something. Please, stay in control of your emotions, all right? It's not manly, like when you start like going hysterical like that and saying, oh, I'm gonna have to pay $50,000 for a loaf of bread. I mean, come on. The national debt, all right, in the time of Reagan was $800 billion. Okay? Inflation was 14% annually. We are now at 28 trillion. All right? That's almost 40 times more. What, 30 something, 35 times more than the national debt 41 years ago. And inflation, they're dying to get it up to 2%. So please don't talk. I mean, I don't know how many times I got to say that the print money, all that stuff. And again, what cracks me up, frankly, is that all of these people, including Warren Buffett, they're just looking at the central bank. They're looking at the Fed. Like nobody is talking about the fiscal. And that's real printing money. So, Guuuunnnnddddlaaaaccchhhhhh, and I don't know, to be honest with you, like, how is he still the bond king? I mean, the guy should be broke by now because, you know, he should be like that guy, Nassim Taleb, you know, fooled by randomness, this guy who's supposedly a hedge fund. I don't know what he is, really. He wrote a couple of books, Fooled by Randomness, and talking about black swans of probability and stuff like that. You know, I remember back, maybe it was like 2011, he said everyone in the world should be short treasuries. Everyone in the world. Like, you know, you'd be ruined. You should, if you're running a fund, and I think this guy was running some fund, I mean, he should be broke. I don't know if he is, but he should be. And a lot of these quacks out there who are calling for this kind of hyperinflation, hyperinflationary depression, and they're always fixated on the Fed. The funny thing is now, if any one of these guys would come out and say, hey, the government just sent out, you know, 3 trillion of stimulus checks for a total of 6 trillion year over year, you know, last year and this year combined, I mean, I'd be a little bit impressed that they got it. At least to some degree, they're focusing on the right thing. But to them, it's all about the Fed, which I explained yesterday. The Fed, let's go over it again. The Fed is a bank. It lends against collateral. The Fed regulates the financial markets. Repeat after me. And the Fed sets prices by virtue of its interest rate setting power. And when you set rates lower, you set prices lower. I don't know how else to come out. I mean, repeat, let that sink in. If any one of these guys ever spoke about fiscal, I mean, I'd be really, really impressed. None of them are. So there's no such thing. Hey, Jeffrey Guuuunnnnddddlaaaaccchhhhhh. And I doubt you're watching this, but if you are, there's no such thing as an unfunded liability. I mean, it may not be funded now because the bill comes due whenever, like in 20 years, but it'll be okay. It'll be paid. There's no inability of the U.S. government to satisfy its liabilities in dollars because it is the monopolist issuer of the dollar. I mean, that should be simple to understand. And that's why all of these crazy predictions by these people never happen, and they're never going to happen. By the way, interest rates, 10-year bond yields were down today. I'm telling you, folks, look at the commodity markets. They're telling you over the course of the next year, prices are coming down. You heard it here first. Anyway, that's it for today. Don't pay any attention to Jeffrey Guuuunnnnddddlaaaaccchhhhhh. Go to my website, learn something, sign up for a 30-day free trial of MMT Trader. It's fun taking money from these people, folks. Come on. What are you waiting for? Bye.